Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq 100 E-mini futures contract. We've had a great couple of months trading the Nasdaq E-minis. We've had a very strong cloud chart cross signal back here in September, and then price action above the cloud that is bullish, and then we had a very strong rally from that move onwards. Note how the turning line of the cloud there became quite significant zones for potential rebounds there. We also recently had a very strong rebound from the standard line of the Ichimoku cloud. You can see that moving that support zone there. Now the critical support zones for December is this standard line of the cloud as well as the top end of the front end of the cloud. So far this rally is okay as long as these two support levels hold, and when the market's now getting close to the old highs there, to take it out and then move higher from that zone. If we get a breakout past that resistance zone, the November high there, then we should see a nice continuation of the Santa Claus rally into December, and then maybe a little pop in January, and then the usual February kind of retracement in the market that we expect at that point in time. But so far so good. Some really great signals here. You can see there the cloud chart cross buy signal we got there. Another traditional standard line and the turning line cross there also came a nice buy signal there. And if we just review some of the previous trades here, May, June, July rally also captured that with the Ichimoku clouds. Cloud chart cross, strong buy signal there. And then we became a little bit extended, then started taking profit off the table. We look at the price action here and the distance of the top end of the cloud. So these are kind of areas where we expect some consolidation. You can see there we track the distance between the price action and the top end of the cloud. Gives us some ideas how extended the rally is. But the back here in July became very extended. Then we had a very strong consolidation back down to test the top end of the cloud for support there. That failed. Then tested the bottom end of the cloud. That failed. And then we had these old support zones here that came into play for the rebound there back at the beginning of August. And then we had a nice strong rally, cloud chart cross there, then ran into trouble close to the top end of the cloud there, and then another consolidation back down to retest this cluster of support here in August, which is the May high there. And then the rally, the taps opened, and we had a nice strong rally. So we had a nice year-end rally in the futures contract. Just watch out for the resistance there, and it'll be interesting to see if we're going to break past the old high there on the resistance side of the Nasdaq futures contract. Taking a look at the futures contract on a 4-hour intraday basis, we had a fantastic rebound there from old cloud chart support levels back here at the beginning of November. And then with the election result, we had a very strong move there. Broke past the bottom end of the cloud, right past the top end of the cloud, entered bullish territory. Price action above the top end of the cloud is bullish. Had a very strong rally, became very extended, and it was time to take some profit off the table as the market was consolidating back down, all the way back down here to rebound from this cloud chart support level on the 19th roundabout. So there was the 19th, yes. So nice strong rebound from that area, back above the bottom end of the cloud. And then a bit of quite a whiplash back and forth volatility, but at least the last cloud chart signal gave us a nice trade there, and breaking past the top end of the cloud. And then another retest of the bottom end of the cloud. Yeah, nice strong support there. And then another breakout past there. So those three nice trades there on the S&P, the Nasdaq E-minis. And then we're now getting closer to this old high. So that's the upside target. There is that high there. For this current rally. Beware the front end cloud chart support levels on the 4 hours. So these are the support levels going into the rest of the week. So we could see any kind of correction to either the turning line or the standard line or the front end of the cloud there, the top end as well as the bottom end of the cloud. These are critical support zones to keep an eye on the 4-hour Ichimoku. So it's that zone there. The next one is the top end of the cloud. Top end of the cloud there, and then we have that standard line of the cloud also. So there's a nice cluster of support in around the 21k, and then the upside target is this old high there for a profit target on the current trade. We need to see a breakout past that, so we probably will get there by the end of the week. And we'll be interested to see if we maintain that upward momentum. But by that time, we will be a little bit extended from the top end of the cloud, so it will be ripe for some form of a consolidation. But also keep another eye on this resistance zone there. We're battling that zone now. The top end of the cloud here is a resistance zone there, as well as all these highs there also can come back into play on the work. So we are fighting that resistance zone there. So we need a bit of a breakout there past that zone to get to the other top end resistance zone. But that's the analysis using Ichimoku on the 4 hours, and the primary trades with the cloud chart crosses here, and then also the rebounds from cloud chart support levels there, as well as after the breakout we always get a kind of a second test on the top end of the cloud, this case right down to the bottom of the cloud. So both those areas are swing trade buys, and then you get the cloud chart cross to the upside is another swing trade buy. Keep an eye on the upside targets for the Nasdaq E-minis. Until next time, happy cloud chart trading. Bye for now.